Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're browsing through the website, you could also sign up for some free special reports that we offer to our readers, and they get delivered to your inbox. Times have been tough for real estate investment trusts or REITs due to higher costs of financing and servicing debt as yield on 10-year Treasury bonds approaches 5%. This has a negative impact on REITs, financing rates, margins, and profitability. Although the current macroeconomics overhang is a concern, it might be a better idea for investors to adopt a long-term perspective. While you wait for economic situation to improve, investing in a REIT is a great way to generate income. That's because the mandate of this kind of business structure is to pay out minimum of 90% of its taxable income in forms of dividends. John?
Exactly. So take today's income pick, a CubeSmart, which trades on the New York Stock Exchange under ticker CUBE. It's an $8.4 billion industrial REIT. It has more than 1,200 self-storage properties across the U.S. The company is, in fact, the third largest owner and operator of self-storage properties. When it comes to income, the REIT has paid dividends for 19 consecutive years. Moreover, in January, the company extended its dividend growth streak to 13 years by raising its quarterly dividend. Its 2023 annualized dividend of $1.96 per share is up by around 14% from its 2022 annualized dividend of $1.72 per share. Now, as of this recording, CubeSmart stock price is down by 30% from its 52-week high and down 23% over the past 3 months. Now, I think investors could view this as an opportunity. Cube stock is still way up from its March 2020 low after mounting a significant rally to its December 2021 high. Unfortunately, as interest rates began to ratchet higher, CubeSmart stock started to move lower, and since early 2022, it's been caught in a sideways channel. Now, I like to see Cube stock hold support around $34 to $35. This could be followed by a rally towards $48 to $50. If the stock fails to hold support, it could drop towards $27 to $32.
Let's talk about financials here. How is CubeSmart doing financially?
CubeSmart has actually reported higher revenues for 4 straight years, up by 69% from $597.9 million in 2018 to a record high $1 billion in 2022. The company's revenue growth rate of 22.8% in 2022 was a 5-year best, while its compound annual growth rate for the 2018 to 2022 period was a healthy 14%. Now, analysts estimate that CubeSmart will experience a revenue contraction of 6.5%, $943.6 million in 2023. Now, that's due to macroeconomic uncertainties, albeit they have a high estimate of $1.06 billion. There is some optimism for 2024, however, as analysts expect the company's revenues to rebound by around 3.5% to $976.7 million that year. For 2024, they have a high estimate of $1.11 billion.
What about its bottom line?
Well, on the bottom line, CubeSmart has been consistently profitable on a diluted earnings per share basis. The company had significant earnings growth in 2021 and 2022, reporting record high EPS for 2022. Now, analysts expect the company to report earnings of $1.76 per diluted share for full year 2023, followed by $1.85 per diluted share for 2024. Now, it also has an enviable history of churning out positive free cash flow, which is a positive sign considering its ability to pay out dividends. So in 2019, it reported 5.6% growth in free cash flow, followed by 2% growth in 2020, 56.5% in 2021, and 27.4% in 2022.
Dividends here look safe.
Yeah, CubeSmart current quarterly dividend of 49 cents per share translates to a yield of 5.12%. Cube stock's 5-year average dividend yield is lower at 3.8%, but that's actually a positive because it's due to higher share price over the same time frame. The company's payout ratio is 110.5, which isn't unusual for a REIT. Now, given the company's expected earnings over the next 2 years, CubeSmart stock's dividend will likely continue rising.
John, thank you so much for your analysis. Cube stock has broad institutional ownership, with 586 institutions holding the majority of the outstanding shares. Moreover, company insiders purchased shares to tune of net 20,808 shares over the last 6 months. The fact that CubeSmart consistently generates more free cash flow then earnings is impressive. The company's high earnings growth is attractive, which should result in investor being rewarded well. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.